Okay, everybody. Hope we're all doing well. Anyway, so let's take a look at this over here. So this is a question that I assigned to you that as I'm looking at this now, I have no idea why I assigned it, but let's have some fun. So I've never done this question before, so this might take a little bit longer. I'm not really sure, but I kind of like it. It's a little bit different than what we have also done, so we'll see if we can figure it out together. So Grant Wood Corporation's balance sheet at the end of 2019 included the following items. Now it's listing for us the information available for 2020. So net income, equipment, depreciation expense, patent amortization, current assets. Building was completed at a cost of 27,000. An addition was completed at a cost of 27. Long-term investment in stock was purchased for 16. Bonds payable of 50,000 were issued. Cash dividends of 30 were paid. Treasury stock was purchased at a cost of 11,000. So the first thing I know is that what's different about this question is we're not given the beginning and ending balances, which is never something I would do to you on a cash flow. But let's just kind of go through this here and try to go through and explore it. So what I'm going to do is for the current assets, right? So if I was doing a statement of cash flows, let's just kind of go over here. So I'll come over here. I need to do my skeleton. So I'll get Grant Wood Corporation. Okay. Okay, now the one thing we do know is in this here, is that our beginning cash balance is going to be 82,000, okay, for cash. So I know that my beginning balance was 82,000. Okay, so my beginning cash balance is 82. So that means in terms of current assets, that my total current assets were 235, but as I'm going to be looking at cash separately when I'm doing the statement of cash flows, this over here will have a beginning balance of 153. So what I'm doing first is that these are only the beginning balances. So let's go through and put in the beginning balances first. So I have land of 30. I have buildings of 120. I have equipment of 90. I have accumulated depreciation on buildings, beginning balance of 30. I have an accumulated depreciation on equipment of 11. So these are all beginning balances. Those will have credit balances because of their contra asset accounts. I have patents of 40. Current liabilities of credit of 150. I have bonds payable of 100. I have common stock of 180. And lastly, over here, I have my retained earnings. And my retained earnings balance had over here a balance of 44. So what we want to do as well is that, again, if you can't remember this, this is by far the most important thing to remember as if I'm going through and doing this really, really quickly, right? And like, how do I know where the balances go? It's because of this. Assets have debit balances. Contra assets clearly have credit balances. Liabilities and equity have a credit balances. Increase with credits, decrease with debits. Okay. So the following information is available for 2020. Net income was 55,000. So where does net income go? So net income is going to go right over here into retained earnings. So if my net income is right over here, I'm going to do the opposite to cash. So here I'm going to have my cash flows from operating, investing, and then financing. going to give myself a little bit more room for investing and financing because I have a feeling I'm going to need it. Okay. So over here, my first one is net income, which is going to be over here at 55,000. So I'm going to come up here and say, here's my net income at 55, debit to cash. It's the same kind of process I was going through on the earlier questions. And so just we can label this, we can say that this is number one. So you just know where that's coming from. Okay. So equipment cost of 20 and accumulated depreciation of 8 was sold for 10. Okay. So when I sell equipment, the journal entry I will always use, and this applies for any type of equipment sale: loss, plug, accumulated depreciation on the equipment, cash, equipment, and then gain, plug. Okay. What this means is that when I sell equipment, I have to take that equipment off my books. So I'm going to do that with a credit. I also have to take off the related depreciation on that equipment. I'm going to be doing that with a debit. The cash proceeds will be showing up as a debit, and then I'll have a gain or a loss in terms of my plug. My rule is when I'm doing my cash flows this way is I take the balances that I put in that journal entry and I put it into the T accounts. So here, my equipment had a cost of 20. It had accumulated depreciation of 8 and was sold for 10. So again, right over here, look at number 2, right? So equipment cost of 20, accumulated depreciation of 8 was sold for 10. So over here, what I'm going to end up doing is I'm going to say, all right, I've got 18,000 of debits. I have 20,000 of credits. So over here, to balance my T account, I'm going to need this loss right here of 2. So does this kind of make sense? Well, the carrying value of this equipment on my books was 12,000, or the 20 minus the 80. I only sold it for 10, so I'm going to have a loss of 2. So what I do with this is I'm going to basically put this into the T accounts. And again, this is kind of by review from Accounting 1A. And again, if you didn't have this before, please go see the other videos. So the loss is going to go into the operating section. And this will be for 2,000. The cash proceeds from the sale of equipment are going to go, that 10,000 is going to go into investing. Okay. And we'll take this out right now. Okay. And then over here, I have to put into the equipment account over here 20, because I sold equipment. And then over here, I also have to put in the accumulated appreciation on equipment. And this is going to be of 8. Okay. So again, when I sell equipment, and again, if you've never seen this before, I'm going to refer you to some other videos. But I'm going to put that loss on sale of equipment in the operating section. The cash proceeds goes into the investing section. And then over here, I decrease the equipment balance. And over here, I put the debit into when I removed it into here. So that's how I handle transaction 2. Okay, so depreciation expense was 4,000 on the building and 9,000 on the equipment. So if I was to be doing this as journal entries, I'd have depreciation expense, and then I would have accumulated depreciation accordingly. So since we're just dealing here with the cash flow, let's go ahead and then say for the accumulated depreciation on the buildings. So depreciation expense was 4,000 on the building. It was 9,000 on the equipment. What I do here is I'm going to be doing the opposite to cash. So this is going to be depreciation expense buildings, depreciation expense, equipment. And as I'm looking at this, I will definitely need more room. So these will show up as debits. I'm doing the opposite to cash. I add back depreciation to my cash flows as it doesn't have an impact on cash. Okay. So come up over here. Okay, so that was number 3. Okay, patent amortization was 2,500. Okay, so there's a couple different ways we could do this. Is that when you're doing amortization expense on patents, is you can actually directly amortize it, or you can use an account called accumulated amortization patents. Either way, you're going to come up with the same result. I personally prefer to use the accumulated amortization patents. So when I go through and do this over here, it was 2,500. So if my amortization was, my accumulated amortization was 2,500, my debit would be to amortization expense, which is again a non-cash charge over here for 2,500. Okay. So over here, it tells current assets other than cash increase by 29,000. So if these increase right over here of 29,000, so what I'm going to do over here is do the opposite to cash. So I'm going to go over here. This is going to be an increase in current assets. Okay. It says current liabilities increase by 13,000. So do the opposite to cash here, go here and say an increase in current liabilities. Okay, so again, if it increased over here, basically means it was a debit. So I do the opposite to cash when I'm going through and creating my statement of cash flows. An addition to the building was completed at a cost of $27,000. So over here, I would be capitalizing that to buildings and do the opposite to cash, completion of building addition. So I'm going to go ahead and credit buildings for 27,000. Okay. Now I come over here and say that a long-term investment in stock was purchased for $16,000. So do I have an investment account? No, I get to create a new account. So right over here, I'm going to do, I'll put this down here. So we'll call this long-term investments. And I purchased a long-term investment over here. It was purchased for 16. So this would be a debit to long-term investments. And then over here, I'm going to do the opposite to cash in the investing section of 16, purchase of long-term investments. Okay. All right, bonds payable of 50,000 were issued. Okay, so if we're issuing bonds payable, it means I'm increasing them. And so over here, I do the opposite to cash, or 50. This is going to go into the financing section. Okay, so that's where that will be going. Okay, over here, cash dividends of 30,000 were declared and paid. So for my cash dividends, this is going to be over here at 30. I do the opposite to cash, payment of a cash dividend. This is going to be here at 30. Then lastly, it says treasury stock was purchased at a cost of $11,000. So when I come over here, I'm going to have treasury stock. Treasury stock is what we call it's not a contra equity account. Rather, it's going to be a reduction to owner's equity. So over here, I've got a debit here of $11,000. And then I'm going to do the opposite to cash, or go right up here. And in the financing section, I'm going to show this over here as 11 and purchase of treasury stock. Okay. What is treasury stock? It's basically stock that I'm bringing back into my treasury. The best example I can share of you with this is one that I shared with you last night. Let's go here to the Home Depot, right over here. And as I see over here for Home Depot, you can see right over here, treasury stock. This shows up as a debit in the retained earnings. It's not a contra equity, but it reduces the holdings of retained earnings because these shares are no longer really considered to be outstanding. Okay. So after I've gone through and I've done all this, what do I do next? Well, in order to figure out my balance sheet, what I'm going to need to do is so let's just kind of go through here. We got treasury stock, we did that, cash dividends, bonds payable, long-term investment, in addition to the building, we got that. Current assets other than cash increased by 29. We got the patent amortization, depreciation expense, equipment, and then net income. So what I'm going to do now is, in order for me to go through and do this, is I believe I've actually kind of got most of this down. So here for my current assets, I have 182. For my land, I have 30. Nothing's happened there. My buildings, I already have 27. Now, from the statement of cash flows perspective, we already actually have done this. So we've already been putting things in here. My equipment didn't change. I just sold some. My accumulated depreciation on the buildings is now at 34. My accumulated depreciation on the equipment is now going to be at 12. My patents are going to be at 40. My current liabilities are going to be at 163. My bonds payable are going to be at 150. My common stock is going to be at 180. My retained earnings is going to be at 69. My accumulated amortization on the patents is going to be at 2,500. My long-term investments are at 16, and my treasury stock is at 11. So when I've gone through and done all this, I'm now going to be seeing over here that I have, so I have a total, so my total cash provided by operating activities is $56,500. For investing, this is total cash used in activities of 33,000. Over here, I've got 50 and then 41. So this is going to be total cash provided by financing. Okay, so this problem is a little bit weird. And so now what I need to do, this is my total change in cash. So my total cash changed by, provided by operating was 56,500. Used in investing was 33,000. And then provided by financing is going to be 9,000. So when I look at this from a T account perspective, right, what's my total change in cash? Well, my total change in cash is going to be 56,000 plus 9, which will be 65.5, less 33 is going to give me 32,500. So this is my total change in cash. It's going to be 32,500. So if I get this 32.5 from right here, my ending cash balance is going to be 114,500. So to finish up my statement of cash flows, right over here, Starting here with my net income. So this here will be 55,249, 2.5. This is going to be a negative because it's a credit. And then this here will be a positive. So I'll just kind of copy this over here. And this will be a total of 56.5. From investing, I have 3 transactions. I'll give myself a little bit more room. So here from investing, I've got, see here, I've got sale of equipment, building addition, and then purchase of long-term investments. So my sale of equipment is a positive amount. It's a debit, so I'm going to show that as a 10. And these 2 amounts here will be showing up as a negative. So my total cash used in investing activities could be negative 33,000. From financing activities, I actually had 3 transactions. So I'm going to again move this down a little bit. So I have here issuance of a bonds payable. I have payment of a cash dividend, and then the purchase of treasury stock. Okay. So issuance of a bonds payable, this is going to be 50. Payment of a cash dividend, 30. Purchase of treasury stock, 11. So this is my total cash provided by financing activities of 9. So again, when I add these 3 numbers up, this should equal 32,500. Okay. Now, for on to the more fun part. Does this thing balance, right? So we're going to have to kind of check this out. So I have not looked at the instructor manual. I promise you, I did not look at it. So let's go ahead and do a balance sheet for Grant Wood. So here for Grant Wood, balance sheet as of 12/31/20. We're doing a classified balance sheet. I want to say amounts in thousands. So I'm going to have current assets, or I should say assets, current assets over here, literally current assets. This will be 182,000. Land, equipment, buildings, and the related accumulated depreciation, those are all non-current assets. So over here, including long-term investments and also the patent. Okay, so total current assets is going to be 182. For my non-current assets, okay, so this is going to be land. And I'm going to move this over just a little bit because I'm just going to show you how I do it. So my land over here is going to be at 30. For my buildings are 147, less the accumulated depreciation on buildings. It's going to be here at 34. My buildings net is going to be 113. Then I'm going to have over here equipment, less accumulated depreciation on equipment. It's going to give me equipment net of 58,000. Come down here to patents, 40, less accumulated amortization on the patents, and this is going to be 2,500. Patents net of accumulated amortization is going to be 37,500. Then I have long-term investments. Okay, so for my long-term investments, I have 16,000. Okay, so my total non-current assets are going to be 254.5, my total assets are going to be. And as I'm sitting here, I'm an idiot. Okay, why am I an idiot? I forgot the most important asset of all, which is cash. Hold on. So I need to add the cash into our current assets or I'm not going to balance. Okay, so right over here. So cash, okay, so my ending balance in cash, we computed that over here to be 114,500. So that was my ending balance. So my total current assets were here of 296.5. So my total assets are going to be 551. What you'll notice here is I'm kind of putting these things out here. I just want to see, make sure you understand how I'm getting to my numbers. I usually put if I'm totaling up something, that's why I'm putting this over here. Okay, my liabilities. Okay, so I've got current liabilities. So over here, my current liabilities are actually grouped into one account. And this is going to be for 163,000. So my total current liabilities is going to be 163. Non-current liabilities, I'm going to have bonds payable. This is going to be over here, be a 150. So I'm going to have total non-current liabilities of 150. So my total liabilities is going to be 313. For my owner's equity, or shareholders' equity, I'm going to have common stock, which will be at 180. I'm going to have retained earnings, which will be at 69. And then lastly, less my treasury stock. And my treasury stock had a balance of 11. We just call this, actually, just call it treasury stock. It's not really less. So when I add up these three numbers, so my total owner's equity, and this is like tenths. This is like, I have no idea if this is going to be right or not. So when I add up these two numbers, total liabilities and owner's equity, I'm going to get hopefully 551. Wow, yay. And I'm just going to look at the solution here real quick for the chapter, just because I want to see if they did anything differently than I did. So we'll just take a look at that real quick. Just give me a moment. So as I'm looking here at the solution manual over here for KeySo, let's just kind of see here. So I got the net income. I didn't put in the plus or minus adjustments to reconcile net income. But over here, they combined the two amounts for depreciation expense. I broke it out. Amortization expense of the patent, increase in current assets, negative 29, increase in current liabilities of 13. So we're square there. Sale of equipment, addition of building, investment in stock, net cash used in investing activities, we're square on that one. Purchase of treasury stock, all good there. Net increase in cash, and then over here, and let's just kind of see over here. So, and then in terms of the balance sheet, they aggregated their current assets and their cash. I wouldn't do that. I'd break it out. Over here, the land, buildings, equipment, and then the patent and tangible assets are listing this out separately. I just kind of dumped them all down here. You probably actually would want to say property, plant, and equipment, and then you'd also would say over here patents, but I'm not, as long as you're listing it as a non-current asset, I'm okay with it. And then in terms of liabilities, we're on the same track. I call it non-current, they're calling it long-term. Over here, stockholders' equity, and then treasury stock. And so, yeah, so that's pretty much it. So they said that this transaction only took like 30 minutes. I don't think it takes 30 minutes. I think this was a little bit longer, but it just may have been the way that I was doing it or going through and explaining it. So under exam pressure, who knows what would happen. But at any event, I want to thank you for joining me here on today's video. Hopefully you found this helpful, and I will see you on the next video. Have a great one.